Hi, hello, and welcome to today's Stock Spotlight, your weekly stock market recap with FinMeUp. Today, we will be taking a closer look at Naspers and their CEO step down, Capital Appreciation's business update, Argent and their insider purchases, and last but not least, the inflation figures are in. What does that mean for South Africa? We will also be taking a sneaky, cheeky little look at Caxton, so stay tuned and hear what the experts have to say. Over to you.
Thank you, Ingrid. So let's jump right into it. First, we're going to look at Naspers. So nothing big, but actually very big. Their CEO of around 10 years, Bob van Dijk, has stepped down as Naspers and Prosus CEO, effective immediately. Obviously, when something is effective immediately, it is serious. Paul, what do you make of this news? Obviously, I don't think Bob has created the best reputation for himself at his time at Naspers. Obviously, his main task almost was just to lower the gap between the discount to net asset value, and that hasn't happened. We haven't really seen any amazing new investments that has played out well. Obviously, they've got various exciting companies, various startups. It's VC, it's exciting, but still, Tencent was the big story of the last how many years, and Bob hasn't really been able to create anything as leadership. Obviously, it's not his sole mistake, but also he hasn't been able to close that gap. What is your take on this? Overall on Fin Twitter and so on, people are liking this move and they're saying it should have happened a long time ago. And it has now happened. So it's going to be interesting to see what happens now.
Yes, the stock price is down a little bit, but I think this is just investor uncertainty because the CEO has stepped down. So that's not a good thing from an investor perspective. But I think over the long or medium to long term, this is a good move because, as you rightfully said, Bob van Dijk didn't do an amazing job. I think a lot of investors were very frustrated over the last how many ever years. And you've got one guy who's managing or CEO of both Prosus and Naspers. That's two of the biggest companies on the JSE. So yes, this might be the move that we've been waiting for. It's also very important for South Africa's economy to have brilliant and proactive CEOs of the big companies because we need to thrive. So yes, maybe this is a good move. How will it pan out? Not sure. So I'm keeping my eye on this one, and we'll keep you guys updated if we know more and see where this is going to go.
The next company, Capital Appreciation, another small cap on the JSE, but even though it is a small cap, and usually small caps on the JSE have liquidity issues and also PR issues, we don't really see them covered that often. Capital Appreciation has been covered quite often on various channels and various people, and recently there's been a bit of a don't really know what to do with this one kind of vibe with Capital Appreciation. So they issued a business update. We're not going to go through the entire business update. If you want to read the entire business update, the link is in the description. But overall, they just issued an update on their software division, their payments division, and GovChat update. So the software division, there's growth. It's single-digit growth without their latest acquisition called Dariel. With Dariel, their revenue is expected to increase by around a third. So the software division is looking good, although throughout the different segments and divisions, they have highlighted that the economy is taking its toll. I mean, clients are more cautious ordering whether it be new equipment or extending licenses, whatever that might be. So the economy is definitely taking its toll on Capital Appreciation's growth. We know where they could have been with higher economic growth. So on the payments division, they are gaining market share in point-of-sale terminals market, but once again, there's a temporary caution amongst customers. And then finally, GovChat granted the right to intervene in the Competition Commission's prosecution of Meta. So obviously Meta is previously known as Facebook, Instagram, WhatsApp, all of that. And because of WhatsApp and the domination, there's been a court case for long, and GovChat finally has been granted the right to intervene. Overall, I don't really know what to think about this business update. There's signs of growth, and usually I've seen a comment that it's fluffy commentary from the management. And these business updates usually make it look quite good. But it's going to be interesting to see the actual financial results and performance. And we've seen that there is a lot of cautionary within these different divisions because of the economy, and they are majority in South Africa, although they are starting to expand overseas, but it's going to take some time. The management is optimistic medium to long term. Let's see what the finances say. Paul, any further comments from your side?
Hey guys, I just think it's a small cap on the JSE and it's a tech company. So if you can't, that's high risk play. And for me, I just feel like if I get these type of business updates, it doesn't really say anything. It says, yeah, we're muddling along, it's going well. But if I see a tech company on the JSE and it's a small cap, I want to see it's going great. We have massive opportunity and we're making our moves. So I think there are better opportunities elsewhere. Personally, it's not a company that I will look at, but it's held up quite well the last couple of years and you can make money. But just know that this is a high risk play.
The next company is Argent, a company that both Paul and I own. And there's a few reasons for that. But today we're going to look at their share repurchases. So they've been buying back shares now for quite a while. And every now and then they just issue a statement, we bought this amount of shares back. And let's look at what that means. So this latest update, they bought around 5 million rands worth of their own shares. So it shows that there is enough cash to meet their obligations, but that they can actually buy back shares. So there's three things that companies can do with cash. Either reinvest it, in new businesses, acquisitions, invest in new products, innovations, etc. Or they can pay dividends for the likes of Thungela. We've seen, they preferred that route, paying dividends. Or you can buy back your own shares. The reason why I like when companies buy back their own shares, like Santova, which is my biggest holding, is when it makes sense. For example, Argent's PE ratio is now around 4. Okay, so it's not expensive, it's cheap. There is a discount to net asset value. And what it does, it creates a medium, even to long-term benefit for the company and shareholders, because it actually lowers the outstanding values of shares. So even if the earnings stays the same, the earnings per share will increase. So, if there's growth in earnings, you'll even see more growth because they are buying back shares, because the value that you own per share actually increases. The percentage in the companies that you own increases, and so does the profits when the profits gets earned. So, overall, Argent, I like it. Purchases, or they bought back shares. We have seen some insider selling in the latest months, which is not always the best sign to see. But, there is that saying, directors could sell for many reasons. Maybe they just want to buy a big house or a holiday house or whatever. But there's only reason why they buy shares. So there is that saying, who knows why the company or the insider sold. Many times there's also tax obligations that needs to be met. So not too worried about that. Looking forward to the next set of financial results. Paul, any further comments on Argent?
So once again, I'm a shareholder in this company. I'm happy with the growth, and I think it's still got legs. And if you want to learn more about Argent, I did do a stock savvy episode with Josh Viljoen, where he basically explains the whole company, how they make money, where they operate, etc. And you can just follow the link in the description.
Awesome. Next, not really a company, but relevant for the market and all things finances. Inflation. So the inflation rate year over year increased to 4.8% from 4.7% previously. So not a massive increase. But my biggest question, Paul, is, so a lot of people have debt, and debt becomes more expensive when interest rates go up. Obviously, inflation is nobody likes inflation, because everything that you bought last year is now more expensive. So your purchasing power is lower. And we also don't like higher interest rates, because those who have debt actually have to pay more debt on their debt. But for those who have money markets, maybe it's a good investment. But let us know what you think of the existing inflation and interest rate environment, and maybe just where we could be heading over the next 6 to 12 months.
Yeah, so if inflation is met with interest rates, so if you have high inflation, the central banks have to increase the interest rates in order to decrease inflation, to bring it back under control. So inflation sucks for us. This whole scenario sucks for everyone. It's gonna probably lead to a recession, if we are not already in a recession. Firstly, high inflation means that everything is more expensive. So you as a household, you as an individual, have lower disposable income. Especially something like food inflation is still at, I think, 13% at the moment. So overall inflation, yes, is down at 4.7%, but food inflation is still very high. So you really feel it on a personal level. And then the central banks increase interest rates. to decrease inflation, which means that if you have debt, you have to pay more interest, and no one is going to acquire new debt because interest rates are so high. So if you wanted to buy a house this year, you're probably not going to do that because the loan is just too expensive. So you're going to wait another year or two. So overall, expenditure in the economy decreases, the economic vehicle slows down, and a ripple effect happens, and all of a sudden we're in a recession. So how do we get out of this hole that we're in? Well, when inflation settles down like it has now, which is great news, the central bank says, okay, guys, we're going to give you a break, and they start lowering interest rates. And the moment that happens, you pay lower interest on your debt, more people acquires loans, inflation is lower, so you have more disposable income, everyone is happy again, everyone spends again, and the economic vehicle starts running smoothly again, and we all make money. And the stock market, remember, interest rates and asset prices are directly or inversely related. So the lower the interest rates, at least in theory, the lower the interest rates, the higher asset values. So higher house prices, our stock values, bonds, everything. And that's what we're hoping for, because at the end of the day, we are investors. And our money is in the stock market, and we want to have capital growth and dividend income. And we get this via lower interest rates. So I'm very hopeful. Obviously, South Africa at the moment is in a very weird space. We have load shedding, which really makes people negative, especially international investors. And then with this political instability and all of this, so South Africa is a little bit of a wonky situation at the moment. But at least the rest of the world, America, if your money is in America, like the MSCI World or any other foreign fund, then you're gonna make some money if interest rates decreases. So I'm hopeful, and I'm quite bullish on the next 6 to 12 months if interest rates starts decreasing.
Yeah, very interesting. You mentioned bonds. I know I own some bonds that I bought through you. You are my financial advisor. So if you want to book a call with Paul, you can have a free chat with him. Link is in the description. My final take on the interest rates. Let's hope they don't raise it again. I think it is going to be stagnant, maybe just for a little while, just to see, if we can steady the ship. But as soon as we see a steady ship and the lower interest rates, that will definitely benefit a lot of people. So looking forward to that. We don't know when it is, but we'll keep our eye on that. Just a little extra nugget for everyone. A company we did cover last week, but we'll just, it's one of Paul's favorite companies, and because of his optimism and our chats in the office, I also ended up buying some Caxton shares. Caxton issued results last week, and the share price has had a good week. Paul, final nuggets or pieces of insights regarding Caxton, what can you tell us?
Yes, it feels good, Higgo, because you've been bragging the whole year with Santova in the office. I'm like, damn it, I don't have my Santova. But now my biggest holding finally got going, and Caxton is hitting the lights out. So I'm just a happy shoulder, and I'm getting a very nice dividend. And I think it still has legs to go. On my original calculation, the fair value is around 15 to 20 Rand a share. It's still only at 11. So yes, it has. I mean, it's up about 20-25% for the already. But I think there's still some leg room. So I'm not selling. In fact, I actually increased my position yesterday because I think it's just a no-brainer. And now that there's more eyes on it, now we can potentially see some big money also, getting into the stock because it's undervalued in my opinion.
Yeah, thanks for that. Like all things, there are always risks when it comes to investing. So it's always important that you do your own due diligence. And we hope that you find lots of insights in these weekly videos. Just a reminder that this will be shared every Friday on the FinMeUp YouTube channel. So make sure you subscribe and don't miss it. Check the links in the description for more. I hope you have a great weekend. Cheers.